Ordinary investors have been rushing into the stock market with margin borrowings and spending on luxury goods by charging to the credit cards.
Booyah! Booyah!
Phoebe has done well in the stock market. With the borrowed money from the bank, she has bought sports car, fine jewelry, and luxury bags. She also bought herself a ticket to the Bahamas, all paid with additional borrowing on her credit cards. Here, Phoebe meets Joe.
Hey, Phoebe. I heard you are making a ton of money in the stock market, is that right?
Tina.
What? Your name is Tina?
No, Tina means there is no alternative. With the interest rate so low, I have no alternative but to invest in the stock market.
Do you mean FOMO?
Yes. And also fear of missing out, since some of my friends are doing so well in the stock markets.
But I think this is a bubble, and it will burst soon.
Why would you say that?
5 reasons. Number 1. The Fed will taper, meaning to reduce its purchase of bonds soon, and then raise the interest rates. Number 2. Most of the fiscal stimulus is over, and this debt must be repaid by raising taxes. Number 3. Stock valuation, with respect to earnings, is now extremely high. Number 4. Inflation is rising, and inflation hurts profit margin. Last, there is too much speculation in the market with borrowed money. When the market drops, the margin calls will lead to more selling and trigger stop losses.
Round 1. Fight!
Okay, it is my turn. Here are my 5 reasons why the market will stay firm. Number 1. The Fed is still buying bonds from the market and injecting more money into the market every month. The tapering will be slow, and it will take some time before the Fed will raise rates. Secondly, even if the Fed raises rates from 0 to 0.25% and then to 0.5%, it will not be sufficient to slow down the economy, which is driven by a lot of pent-up demand.
Kaboom!
Thirdly, most of the inflation is cost push, driven by supply chain problems and rebounding from low levels, such as oil prices. Cost push inflation is self-correcting by reducing demand and increasing supply. Another reason is that taxes need not be raised if it hurts the economy. Alternatively, the Fed can just buy more bonds. Last, the low interest rates environment is allowing companies to save on interest expense by refinancing into cheaper new bonds. Some firms could also issue bonds at such low interest rates level to buy back stocks.
Round 2. Fight!
But I still see bubble, bubble, bubble.
But I still see the market going up, up, up.
Bubble, bubble, bubble.
Up, up, up.
Bubble, bubble, bubble.
Up, up, up. Okay. Let's stop arguing. I think you made some good points. Valuation and understanding fundamentals are important. So, also is risk and money management. I can never pick the top. And to be prudent, I should scale out a fraction at a time and take some profit now.
One big unexpected bad news. The Dow had its worst drop in history.
Stop loss. Stop loss. Stop loss. Sell. Sell. Sell.
Hey, Phoebe. Is everything okay?
Not really. My stop loss orders help me to get out. At least, I still have some money to pay back the bank and the credit card bills.
Wow, good for you.
Joe?
Yes, what?
Want to buy some designer bags?
Not really, I prefer your sports car.
Thanks for watching. This presentation on Bubble versus No Bubble is brought to you by the Joe and